The economic consequences of the conflict in the Middle East are evident here in East Asia, and South Korea is working around the clock to counter the ripple effects. With more on Press Perspective today. Hello and welcome. You're watching Press Perspective for this Thursday, March 19th here in Seoul. I'm Min Sun-hee. Today we delve yet again into the broader economic impact of the violence in the Middle East on this part of the world, as Iran's retaliation now targets energy infrastructure in the Gulf area. For more on this, I have Ruy Valdes with Spanish news agency EFE Spain here in the studio. Ruy, it's been a while. Welcome back.
Thank you for the invitation, Sun-hee.
I also have Professor Shim Myung-kyu at Yonsei University with us. Professor Shim, it's a pleasure to have you with us.
Thank you for having me.
Ruy, we'll start here in the studio. Let's start off then with a check on the impact of the Middle East unrest on markets here this week. How is the South Korean currency, the won, faring?
Well, if we would have spoke about that yesterday or 2 days ago, the story will be maybe slightly different, but today it hit the lowest in 17 years against the US dollar. So what, let's say, observers consider like the benchmark or the point of reference is 1,500 won per dollar. But now it's always going either below or around that what they call psychological barrier. So there's of course concerns about the effects of having a won such a low valued won. This comes with the reference Brent crude prices going all the way up today. I think it was around $107 in the Asian time of commercialization. And why do all these matters to Korea? Well, of course, we all know how it's very dependent on fossil fuels, and every time there is a rise in the oil prices, the Korean importers need more dollars to buy energy. So this also pushes up the value of the dollar. From the authorities, they keep saying, well, not today, because this is what I just said just happened now, but taking into account the previous fallouts of the national currency, that there was not excessive concern about this volatility. They say, well, at least for now, it's manageable. They, of course, are considering some measures, but of first level, like verbal interventions to affect the value of the coin. But, well, there has not been a major announcement. Also, well, one could say that the actions that we have been seeing is also some kind of coordination also with other countries, like with Japan. There was a meeting with the finance ministers where they point out they were going to work together in some, or coordinate in some form because of the currency of Japan is experiencing also high volatility. All in all, maybe Professor Shim will explain much better than me this part, but sometimes we worry a lot about price going up, price going down, currency going up, currency going down, but the major factor here right now is volatility. If there's high volatility, we cannot plan ahead. So of course, some people want it lower, some people want it higher, but if you cannot predict what is going to be more or less the next day, we're talking about you cannot make future contracts, you cannot plan ahead, and this really, really affects the whole planning and the whole economy. So yeah.
Right. That being said, Professor Shim, what can you tell us about the pros and cons of a weaker won for the South Korean economy?
Yeah, let me first point out the benefit of weaker Korean won on the Korean economy. High exchange rate or depreciation of Korean won that we have observed for the last years can be a favorable situation for the exporting firms because it lowers the price of goods that are exported from South Korea to other countries, including the US. It can lower the negative impact of the possible US tariff on goods that are exported to the US, which is one of the most important markets. Because the contribution of export to the growth of the Korean economy is large, the potential boost of export is kind of the good news for the Korean economy. But we should notice that this is associated with the negative news on the Korean economy as well. Most of all, the Korean firms mainly export the final goods like cars, memory chips, or ships that also require lots of resources or intermediate goods that are exported from other countries. Because weaker Korean won makes price of imported goods to be more expensive, it will put additional pressure on the exporting firms, adding to the already high price level. For example, export price increased about 2%, while import price has increased about 1% in February, which partially canceled out the benefit of increased export prices. This is also related to concerns on the future inflation, because the Korean economy imports many natural resources, including oils, as is pointed out by Ruy. Weak Korean won can further increase the pressure on price level.
Right, indeed. Ruy, the Korean stock market, it's also responded dramatically to the events in the Middle East. What's the latest on that front?
Yes, well, quite a similar line as with the currency in the sense of volatility. Of course, if we analyze the currency value, as Professor mentioned, we will see a clear downward trend. What happened with KOSPI is a little bit different in the sense that before the attacks on Iran, KOSPI, we could say, was having a party. It increased up until over 6,000 points. And then, of course, after that, it has experienced quite a drastic volatility. Today, it fell 2.73%. And yesterday, it jumped over 5%. And we have been experiencing this kind of strong moves around it. What observers are saying is that in general, even though, of course, the war affected the main indicator of the stock market in South Korea, the global AI boom and semiconductor sectors have kind of keep it afloat. If we can take into account, for example, what happened yesterday, because there was some associations and plans, for example, of companies, Samsung Electronics or SK Hynix, announcing some associations with NVIDIA or strengthening their previously made agreements. So in that sense, well, the Kosdaq, I'm not going to go into much details about it, but it has been following similar trends, similar volatility. Again, just to explain, like, for example, yesterday, foreign investors and institutions bought a combined 4 trillion won worth of shares on Wednesday. But then if you compare it to the day before, it's like quite drastically on the opposite side. So well, yeah, basically what we are seeing in the Kosdaq is that high volatility.
Right, and despite these fluctuations within the local bourse, Professor Shim, some entities like Goldman Sachs remain optimistic with regard to the South Korean stock market rally this particular year, while others remain quite cautious. What are your thoughts?
To me, there are opposite views on the Korea's stock market, because there are mixed signals about the Korean economy as well as the global economy. Depending on which signal you put more weights when you make your own predictions about the stock market performance this year, your forecast can be different from others. Some good signs are that the Korean firms can also export goods that are really necessary for production, like memory chips, even during this war. So it might not hurt the Korean economy that particular. Second, this kind of event is usually accompanied with weaker Korean won, as we discussed earlier, and it is also kind of the good sign for the Korean firms, so that investors can still make a rosy outlook. But there are also negative signals or signs on the stock market. First, there are still remaining concerns over the inflation rate in the US, as was also pointed out today by Jerome Powell, the Fed chair. The US inflation rate has not risen that much so far, but capability of importing firms to keep lower price level by absorbing a fraction of tariff would not prolong that long as expected, and also the war between Iran and US puts more and more pressures on the oils and overall price level. So the Fed will have to make some actions, as was also pointed out today. Second, similar to the state that the BOK faces, high expected inflation rate makes the Fed not to easily lower its target rate. Rather, it might need to raise the rate at some point if high tariff rate and the war will be prolonged, and that will put more pressures on the U.S. economy as well as the global economy. So that will make a kind of a negative outlook on the stock market. And third, while the global economy is expected to grow more than anticipated before, as was recently noted by the IMF, there are still so many factors like the trade uncertainty and high geographical risk around the world, including this war, and the uncertain future path of inflation rate also together with the future of the Fed chair. They all potentially drag down the global economy. So we might put some negative weights on when making predictions about the stock market.
Right. Essentially, what we can agree upon is that such concerns will affect investor sentiment. Ruy, I'd like to move on to another market right now. It's one that you mentioned at the start of our program, talking about the oil market, of course. That being said, what's the current price at the pumps here in South Korea? And what can you tell us about the measures undertaken by the government aimed at averting potential chaos?
Well, yeah, the latest average price for gasoline and diesel by OPINET, that is a monitoring system that the government used, is from March 17, a couple days ago, and it's 1,829.61 per liter, and diesel is about 1,827.71 per liter. The government previously, announced and already started to apply a price cap on gasoline. Let's just remember, it's not to the stations, to the gas stations, it's to the providers of this. So you can see regionally that there must be differences between the prices. The first reports were saying that the prices were going down in the gas stations slower than expected, but they were declining. And once they changed their stock, they would expect that they will increase even more drastically in accordance to this new policy. The government has once has applied and also has announced that it will plan a few or several measures to counter this rise in the oil prices. It also secured millions of barrels from other countries, from specifically United Arab Emirates. Yesterday it was a big announcement. Seoul has announced that it secured a total of 24 million barrels. And one interesting thing is that Seoul was also saying that in this meeting, I think it was with Chief of Staff Kang Un-sik, when he went to the Emirates, the country pointed out that Korea is priority #1 in securing this oil for emergency or extra or complementary. So that could seem good news for Seoul. The president also has said that he suggested to apply restrictions on driving based on the license plates. There has been other regulations on diesel too. So besides, there's two ways to see this. We can put it that way. So we have measures that attend the source of the problems, and we have preemptive measures. Today, before coming to the show, we were with a couple of experts talking, and one of them, they're saying that even though there's also an announcement of a supplementary budget and other measures, this is more to extend, let's say, or to extend the period where Korea would not get that affected by this rise of the prices, but they are not really attending the source of the problem. So this is important. This is important to understand, because we need to know, or the important news, of course, will be how to secure a constant supply of energy that will, of course, secure in a very, or at least a medium term, the supply that South Korea needs. But so far, according to the experts, the measures that are announced will, mitigate the effects, and maybe we won't see them in our, in our pockets, affecting our pockets immediately. But still, there has to be a lot of caution on how to analyze this until there's a way to find supplementary sources of oil that really will attend this in a longer term. I think we mentioned this in a previous show, but with war, you never know. And this, as we have discussed with the markets, with the stock markets, with the currency, since there's so much uncertainty regarding a war, and we see one day U.S. claiming almost that they already won, and the next day we see new attacks, and we see that this just could be longer and longer and longer and longer. I would say this thing is not something to take lightly. And of course, it seems the government is moving in the direction to help mitigate these effects. But the source problem, according to this expert, is still not solved.
Right. And with regard to the energy market, Professor Shim, online news magazine The Diplomat says the situation in the Middle East is fueling South Korea's drive for nuclear energy. That being said, where do you stand, Professor Shim, with regard to the general debate over nuclear energy? And what are the prospects of South Korea effectively reducing its reliance on fossil fuel?
Well, I also understand what people worry is about the potential risk of relying too much on the nuclear energy, but I don't know if there are better options than the nuclear energy for the Korean economy at this moment. Most importantly, it seems that the geographical risk from the Middle East region would be prolonged for some time. There are more tensions even beyond the US-Iran war. Israel still has conflicts with other countries and regions, including its war on Hamas. Also, Afghanistan and Pakistan also has a conflict between them. And given that the President Trump seems to have still many reasons to make more conflicts outside of the U.S., the oil supply instability that we see these days might put more pressures on the Korean economy in terms of production and also in terms of the high inflation rate. So in terms of diversifying the risk associated with fossil fuel that we observe these days, it seems rational to seek other ways to generate energy, including the nuclear energy. And expansion of renewable energy is also an important option, but given that demand for electricity can increase faster than one has imagined before because of the development in AI technology, it seems that it is not easy to consider the nuclear energy as a source for future energy production.
Right. Staying with energy supply concerns, but moving beyond borders, Reuters says that Vietnam has reached out to South Korea and Japan for crude oil. Ruy, could you very briefly tell us about this reality?
Yes, well, in a nutshell, Vietnam, in this interesting development, while the Deputy Minister of Industry and Trade was there, was in Japan, he contacted Tokyo side and Seoul side and asked them if they could supply with oil from their reserves. This is, well, relevant to Vietnam because much of the crude also comes from the Middle East. In this statement that was made by the Trade Ministry, they say that they were noting that Japan is one of the countries that has most reserves or has a big stock of oil reserves, and that's why they were trying to motivate them to supply them. Well, just as a final note, according to government data, Vietnam imported about 14.2 million tons of crude oil in 2025, which is a 5.3% increase from the previous year. And there has always also been reports of fuel shortages at some gas stations and some measures that the government has announced for energy saving.
Right, I see. Professor Shim, before we let you go, one very quick question. A U.S. think tank believes that oil supply disruptions in the Middle East will severely affect the world's memory chip market, which is heavily dependent on South Korea. Could you briefly give us some context, and what do you propose to better address this concern?
Yeah, so that's because memory chip market is heavily dependent on the Korean chip makers, including Samsung Electronics and SK Hynix. They together account for 80% of high bandwidth memory and nearly 70% of the DRAM market. And given that both memory chips play the crucial role in modern computing powering AI system and the others, it's inevitable that the supply disruption of memory chips due to the lack of energy in Korea for production or rises in production costs would be spilled over to the entire market and the global economy. What I think is necessary is to put all the efforts to receive normal flows so that we can have the stable supply of the stable oil supply to the Korean market, and then it might affect the global economy not to have that much negative impact, so that we can see a little bit rosy signs of the global economy out.
Right, indeed. All right, Professor Shim, I'm afraid that's all the time we have. Thank you so much for your time and thoughts today.
Thank you.
And we're here in the studio. Thank you very much for your insights.
Thank you, Sun-hee.
All right, that brings us to the end of this edition of Press Perspective. As always, thank you for watching.